Let's talk about corporate taxes for a minute, because these were also affected by the 2017 Trump tax cuts, and some of those provisions are set to expire this year and some not. To be honest, corporate taxes don't make up that big a slice in terms of federal revenue, about 10%. And 90% of all businesses in the United States are what they call pass-through businesses. They're S-corps or LLCs, LLMs, sole proprietorships, and profit on those businesses is reported on people's personal income tax returns. The 2017 tax cuts did give a big benefit to those pass-through entities in the form of a 20% deduction for qualified business expenses. And that is sunsetting this year. And right now I'm going to focus though on corporate taxes for C Corps. This graph shows you federal tax receipts from those C corporations. And right before the election, I heard Donald Trump talking about how he cut that rate from our previous graduated rate that topped out at 35%, and he cut that down to a 21% flat tax on corporations. And he was talking about how federal tax receipts went up dramatically after he cut that, and so maybe he should cut some more. Right here in 2018 is when that tax cut took effect, and you can see initially it did not increase corporate tax receipts until after 2020 when it went way up. The other thing that happened in 2020, of course, was COVID. So during the pandemic, the federal government pumped trillions of dollars into the economy. A lot of that went into C corporations' coffers, and so that they paid more income tax. But when you zoom out a little bit and don't look at such a short snapshot of time, you can see that that increase I just showed you is right here. But when you look over a longer period of time, corporate tax collections have been pretty flat all these years, in spite of the fact that this orange line, which is corporate profits, have increased dramatically. So why aren't these two lines tracking together? It's because corporate taxes are more complex. There's lots of deductions, there's lots of exemptions. For example, in the 2017 tax cut, foreign income got eliminated from the corporate tax calculation. So businesses like Facebook and Microsoft that have a lot of overseas income don't have to pay taxes in the US on that income. There are two main arguments for cutting corporate taxes. Number one is that they'll invest more, and then they'll generate more revenue, which will generate more taxes. And I think we saw in the previous graph that that didn't happen. And the second argument is that by cutting the corporate tax rate, that with the money they save, corporations can benefit their workers by paying higher wages and offering better benefits. And unfortunately, that didn't happen either. Most of the benefit went to these executives at the very top. And the reason for that is because they have a lot of compensation based on stock. What they didn't do was increase wages.